Hello, welcome to the Michael Sisco Show. How do I sound, John?
You sound fine. Can you hear me all right?
Good. I always have technical issues in the beginning of my show. Looks like we're doing better these days. But anyways, audience, welcome and welcome to the show, Mr. John Truman Wolfe. He is a author of 19 books, including the bestseller, Amazon bestseller, The Untold Story of the Global Financial Coup and What You Can Do About It. So welcome to the show. I'm sure that my introduction was lacking. Mr. Wolfe, could you introduce yourself to the audience and describe your latest work and what brings you on, what you're here to talk about today?
Sure. My background, my academic training actually is in American history. I taught at the San Jose State University here in the smoky state of California many years ago. Transitioned into banking. I was a banker in San Francisco and then in Beverly Hills for some years. Then co-founded what's called a business management company. That's a niche industry in Los Angeles and New York. We handle the business and financial affairs of entertainment people, actresses, actors, producers, directors, screenwriters. They all, working entertainment professionals have business managers. So we handle the finances and investments and so forth. I did that for 20 some odd years. I retired in 2006. I started writing. And I've been writing on matters of, finance primarily. I now publish a financial newsletter called Strategic Financial Intelligence, strategicfinancialintelligence.com. And focus, not exclusively, but to a large degree on what's really happening in the global financial system in terms of converting from cash to a digital system, which is very, very, very much in progress and which most people don't know. I also focus to a very certain degree on precious metals. So I write books, as you mentioned. And I not only nonfiction, but I have a detective series which I enjoy writing. It's a lot more fun than writing about global finance, but the nonfiction stuff sells better, frankly. So yeah, and I'd be delighted to share some information about what's going on in terms of the planet's monetary system.
Okay. Yeah. So is there I know with COVID-19, we kind of experienced a bit of a depression of sorts, but what's going on with this coming bank crisis? And is it related at all to any of the current events?
Well, it's not related to the so-called pandemic. One of the problems, Michael, is this. This planet's banks are awash with things called derivatives. A derivative is basically a security that derives, that's where it gets its name, derivative. It derives its value from some underlying asset. So if folks remember the crisis of 2008, they probably remember the term mortgage-backed securities. Mortgage-backed securities, simply a package of mortgages wrapped around a security. So the security has value because it has mortgages that are paying interest. That's a derivative. There's all kinds of derivatives. That's just an example of one. But there are $1.4 quadrillion worth of derivatives on the planet. 1.4 quadrillion. Most of those, 75 to 80%, are what are called interest rate swaps, which is a fancy banking term, but they're really just bets on the direction of interest rates. That's all. These are Vegas-like casino bets, Bank of America thinks the interest rate on Greek bonds is going up. The Deutsche Bank thinks they're going down, and they bet. And that's a derivative. And then people bet on those bets, and people bet on those bets. And there's this pyramid of these derivatives owned by banks around the world. There's about 227 trillion with a T owned by the New York money center banks, JP Morgan Chase, Citibank, Bank of America, Wells. Those banks are pregnant with derivatives. And somebody, sticks a pin in that bubble. Not that I am a pessimist or like to share not good news, but I think that will happen, and I think it will precipitate a banking crisis. By that, I mean banks will probably close for a few weeks. So that's an area in which I write about and try and educate people about. One of the things that I encourage people to do if they've got, accounts in one of these money center banks, which many people do, is to, if they have any large assets in there, is to move them to a smaller or regional bank, which I think is smart to do. The other thing is this, along with these derivatives, is a procedure called bail-ins. A bail-in simply means if a bank is troubled, meaning it's failing, the bank has the right to take the depositor's money and convert it to bank stock. Most people don't have a clue that this exists, but this is formal policy in the EU, in Canada, and it was made policy in the United States by the Dodd-Frank bill. And there's a paper on the internet, I mean, if anybody wants to go look, written by the FDIC and the Bank of England on how bail-ins would work. The bail-in policy came about by the Bank for International Settlements mandating it. The Bank for International Settlements, a bank most people have never heard of, is in Basel, Switzerland. It is the central banker's central bank. So all the central banks of the world, or virtually all of them, belong to the Bank for International Settlements, the Fed, the Bank of Canada, the Bank of Japan, the Bank of Italy. And that is what I call the godfather of the global financial mafia. The Bank for International Settlements, abbreviated the BIS, basically controls and dictates the planet's economies. This is no conspiracy theory. One can go online and look up the BIS very easily. When the Bank for International Settlements saw that the banks were so pregnant, to use that word again, with these derivatives, it issued bail-in policy saying, if the bank gets in trouble, they can take your deposits and convert it to bank stock. So my opinion is they wouldn't issue a policy like that unless they expected it to happen. So I encourage folks to, as I say, move to a smaller regional bank. Bail-in policy only applies, at least now, to banks of $50 billion a year, $50 billion in total assets. So smaller regional banks are safer, in my opinion. So that's one situation that exists in terms of finance, both global finance and how it affects American consumers. The other major issue that I've been writing about has been the conversion of cash to digital money. There is a war on cash on this planet, a very dedicated effort to get rid of cash, and it will go. In your lifetime, Michael, there will be no cash. It'll be gone. You won't have cash. Your bank account will be digital credit, zeros and ones. And that has sprung up, as most people know, digital currency investment sector led by Bitcoin, which most people have heard of. Some people are very sophisticated and invest in it, but that came on the scene in 2009. Here we are in 2020, and this is a major factor. I mean, going back a few years ago, I'm the first to admit I was kind of like, Bitcoin, what is that? but not today. There is $330 billion invested in cryptocurrencies in the world. That's the what's called the market cap. So, and Bitcoin remains the biggest, but there are thousands of these things now, virtually thousands, and not all have. In fact, most of them, in my opinion, aren't worth much. But the top 22 of the last figure I heard, there's 7,000 cryptocurrencies. So, but the top 22 have market caps of $1 billion or more. And they're serious investments. There are there's more than two kinds, but I'll say there's two kinds of digital currencies. There are currencies like Bitcoin that are simply investment vehicles. There's no product of Bitcoin. It was originally designed to be money, international money, and there are vendors that accept Bitcoin in payment for things. But that hasn't really been its primary focus. Its primary focus has been just as an investment, like soybeans or cotton or gold or silver. It goes up and it goes down, but it doesn't have those things that I mentioned are products or commodities. Bitcoin has nothing other than people's opinion. There are other cryptocurrencies that have products that they produce, that they have services that they make available. Ethereum, a very good one. Ripple, a very good one. It's nice to have one's work appreciated. And all, I don't know whether it's necessary, but in full transparency, I'll tell your listeners, I own some of these things. I'm not promoting that people go buy them, but I am saying that these cryptocurrencies actually do some good in the banking world, whereas Bitcoin is just kind of out there and you're betting on which way it's going to go. Anyway, that's what I've been up to.
Okay. I mean, so is there anything inherently bad about it moving to digital, or is the difference really between, I mean, to me, the big issue with currency is whether or not it's fiat or non-fiat. And I think perhaps, do you think a lot of the instability that might be caused in our financial system could be related to the nature of our currency?
Well, as you know, I presume you know, I mean, all currencies on the planet, digital currencies aside, are fiat currencies. A fiat currency, for your listeners, are simply currencies that a government says this is the official currency of the United States, of Argentina, of Italy, of whatever, and they're called fiat currencies because they're official currencies by fiat. The government says they're accepted, and they are. I repeat, going back 100 years, currencies were backed by gold, in some cases silver. No major industrial currency has any kind of backing like that now. I think that system would have continued if the digital revolution hadn't come upon us. And I do think there are things that are inherently bad about digital accounts, because it gives the government much more control over your bank accounts. You'll have nothing but zeros and ones in your account. And, governments can control what you do with those digits, which is not the case now. And it's one of the reasons why there's a war on cash. Governments can't control that. You can take cash out of the bank and stick it under your mattress or whatever, and they don't know, and they can't control it. The same with precious metals. Gold and silver is that way. So the war currently is on cash, to get rid of it, and to convert bank accounts to digital assets, and then they can control them. So I think that's a huge liability of that agenda. While it's a ways off, this isn't happening tomorrow. At the same time, most folks don't understand how fast that movement is going. Beijing, as we speak, has now got a national digital currency, the eRMB. RMB is short for renminbi, which is one of the names of the Chinese currency. Chinese currencies goes by the name of the yuan or the renminbi, and the digital currency is called the eRMB, and that now is being tested by the CCP, the Chinese Communist Party, in 4 states in China. And people are being paid, Michael, in digital currency. So this whole agenda is being moved forward in China as we speak. In addition to that, a survey by the Bank for International Settlements, this godfather of all the banks on the planet, did a survey and found out that 70% of the central banks on the planet are in the process of investigating national digital currencies, or in some cases, they have implemented national digital currencies. Ecuador, for instance, has a national digital currency, as does one of the Scandinavian countries. I can't remember which one right this second. I think it's Norway, but I'm not positive. I think the Ukraine's got a national digital currency. So this isn't, I repeat, some conspiracy theory. This is happening. And it's a major shift in the planet's financial structure and its monetary structure. I don't consider it a good movement, but it's happening.
So this, is it being pushed by the Bank for International Settlements, or are they just the ones kind of gauging? Because you said that they were monitoring other banks who were doing it. So I guess my real question is who is behind, who benefits besides just governments? Is it international, like an international cabal of some sort, or is it just that individual governments will benefit by having more control?
Well, the last thing you said is true, but yes, it's being pushed by the BIS. They're not a passive player here. The major financial institutions on the planet are the BIS, which sits at the top of that pyramid. Below them is the IMF and the World Bank, the International Monetary Fund and the World Bank, which are global financial institutions founded shortly after the Second World War to be helpful to war-torn Europe and so forth, but have become global predators, Michael. And the product of the World Bank, for instance, their product, what they produce, is indebted nations. That's what they produce. The banking industry and the governments work hand in hand. There's a very synergistic relationship there, and so I don't know that I'd call it a cabal, but that's not a bad word. Clearly, there is an effort, and if you want to use buzzwords of the financial elite to push this agenda, and that includes these financial institutions, the BIS, the IMF, the World Bank, as well as the central banks of the world. And as you know, and probably your listeners know, the Federal Reserve Bank, the National Bank of the United States, is a private bank. It's owned by the New York banks. And while it has the name Federal Reserve Bank, there's nothing federal about it, other than the fact that the president appoints the chairman of the Fed. But at least to this point, Congress doesn't control it. And it is in their interest and the interest of other central banks to push this agenda. So it's really both of those entities, in my opinion, governments and the financial structure of the planet, that are pushing this agenda.
Okay. So I know that the U.S. dollar is kind of used as, I guess some would say, the petrodollar, or the basis currency, the base currency around the world. And then you have, I guess, boogeyman countries like Russia and some other in Iran who will try and make other arrangements for a dollar, a currency to use to kind of compete against the U.S. dollar. How do those forces kind of play into this? Are they opposed to, I guess, this Western international finance stuff, or do they play along?
Well, it's a good question. The dollar remains the world's reserve currency. There's a very strong effort to take it down as the world's reserve currency. It has faltered a bit, but it remains the world's reserve currency. But countries like Russia, China, India, don't like the fact that the Federal Reserve and the U.S. Treasury basically dictate what occurs in international finance. So they set up an international economic organization called the BRICS, BRICS, which stands for Brazil, India, China, Russia, and South Africa. Those countries now conduct their international trade in their respective national currencies. That never occurred before. Virtually all international trade occurred in dollars, in U.S. dollars, up until some years ago. So there's an effort to pull away from the dollar as the international currency. You mentioned the petrodollar. For folks that don't, understand the petrodollar. At the end of the Second World War, there was a conference in Bretton Woods, New Hampshire, called Bretton Woods, surprisingly enough, which was a conference of the world allies to restructure the global financial system. Out of that conference came the World Bank, came the International Monetary Fund, and came the U.S. as and the U.S. dollar as the leader on the planet. And the U.S. dollar was convertible to gold. So by central banks. So central banks could hold dollars, and then they could turn them in, if they wanted, could turn them into the treasury and get gold. And that's, you probably have heard the expression good as gold. And that's where that comes from. That system lasted for about 25 years as we went to war in Vietnam, and we're spending huge amounts of money. Charles de Gaulle, in his chauvinistic wisdom, character de Gaulle, but he said, I'm not playing this game. And he turned in all his dollars for gold. And then other European countries started doing the same. The gold reserves of the Treasury started declining dramatically. And so Dick Nixon, in one of the few good things he did, slammed the door on that procedure, and he went, that's it, no more conversion to gold. So this is 1971. So what's he do, or what's the country do? Because central banks were gathering up dollars because they could always turn them in for gold. Now they can't do that. What's going to keep the central banks accumulating dollars and keep the dollar strong? Well, Nixon sends Henry Kissinger to Saudi Arabia, and they make a deal. And the deal they make is, we'll protect your oil fields. You mandate that all oil purchases have to be made in dollars. And Saudi Arabia not only agreed to that, but then spread that game to the other OPEC countries, oil-producing countries. And so any purchases of oil, and countries need oil like a body needs oxygen, were mandated that any purchases of oil had to be done in dollars. And that's the petrodollar. And that kept the dollar very strong. And for the last, whatever it's been, 50 years or so. That system is beginning to break down, but the petrodollar still exists. But if you looked at this from a kind of a backed up and took a look at it from a distance, you can see the dollar starting to falter as the world reserve currency. And there are some countries that now buy oil in other currencies. When others tried to do this years back, the U.S. attacked them, right? Saddam said, I'm going to buy oil in euros. So, sorry, pal. Gaddafi did the same, something very similar. Anyway, there's a whole story there, but which I have on, I'll take a moment and sound like a used car salesman. On my website, I've got a great webinar on that subject, strategicfinancialintelligence.com. I've got a webinar on this history of the petrodollar and what the U.S. has done to protect it, which most people aren't really aware of. But anyway, that's the current status, in my opinion, of the dollar as the world's reserve currency and the petrodollar.
Okay. Yeah, that's always an interesting point to point out when other nations attempt to be independently sovereign financially or economically. They tend to get
That's right.
outed, ousted.
Yeah, exactly right.
That goes back to really mid 20th century, I would say, but we won't go there. Would you is this whole system, I think I know what you'll say, but it doesn't seem to me that it is designed for the common good, except for a very elite group of people. What would you say the financial economic system would look like if it was designed for the common good of everybody in the United States? Or, well, yeah, what would our system here look like if it was designed for the common good?
Well, there's two steps to that, which I'll answer. The first is to kind of remind your listeners that who's supposed to be printing money in this country is the U.S. government. The Constitution gives that power to the House of Representatives. The Federal Reserve Act of 1913 shifted that power to the Fed, the Federal Reserve Bank, a private corporation, and gave that power to them. And they've had that power, again, as you and I'm sure most of your listeners know, the Fed prints money out of thin air. They click a mouse, and that's it. Now, so I would argue one step would be to remove the Fed, make a bank inside the U.S. Treasury, and we should print our own money as the Constitution called for. But the ultimate solution is that money should represent products. It should represent production. It should represent real estate. There should be, the ideal scene would be an annual audit of the products and services that the country produces, and then the amount of money that is allocated to the country is enough to buy the goods and services. Money shouldn't be just fiat. It should represent real production, real products, and real production. So that would be the ultimate benefit to the country. And countries that produced would have more money, and countries that wouldn't. So I think that's the ultimate answer. But the step before that would be to get rid of the Fed and put the economic system under the Treasury, the banking and so forth under the Treasury. There's no need for the Fed, Michael. They make this money up out of whole cloth. They charge interest. They buy the debt of the government. It's a joke, actually.
Yeah, well, they leverage debt, which is kind of their leverage, is the debt, as you mentioned, that they create indebted nations. But is the debt as real as or as fake as the money is, per se?
Well, theoretically, it's not. The U.S. government, and probably most of the other governments around the world, but speaking of the United States, they do their financial planning backwards. They go, They'd look at what they're how much are we going to spend? War, welfare, interest on the debt. How much we're going to spend? We're going to spend $4.5 trillion this year. Okay, what's the revenue? Oh, tax revenue is 3.5 billion. Oh, we're $1 trillion short. What do? Well, we'll borrow it. So the Treasury issues IOUs. They're called Treasury bills or Treasury notes or Treasury bonds. Bills are short-term, notes are medium-term, bonds are long-term, but they're all just IOUs that the Treasury issues. There's an actual certificate there. There's an IOU there, which is different than, it's a step above what you're talking about the Fed doing, which is they just click a mouse. There's nothing there. So there is some reality to that debt. What's going to happen to it is another question. We're sitting at what? I lose track. I think it's close to 24 trillion now in debt. Are we ever going to repay that? I have no idea how, frankly.
Yeah, well, I mean, it seems like the only enforceable thing to it is really sovereign might for any of this. So it's it's like the will of the sovereign ultimately.
Yeah, that's true.
Which is kind of the joke. So I mean, if they wanted to hit reset on the whole program, it seems like they could, but who does that benefit? That doesn't benefit the people running the show right now. So
yeah, exactly, and it takes away control of the government by the bankers. And if you don't think that the bankers are running the government, just take a look at the Treasury sects over the last several administrations. They all come out of Goldman Sachs and so forth. So that's another story. But clearly, governments, presidents, and others think that they're the effect of the Fed and what the Fed decides, and the Fed has got this power based on this act in 1913. And if there are anyone in Congress that had enough sense, other than Rand Paul and his father before him, they just get rid of the Fed, and they put it inside the Treasury. The argument for that is, oh no, it's supposed to be separate and non-political. The Fed doesn't do anything but comply with what the Treasury wants done. They're $1 trillion short, and I mean, all one has to do is look at this last year, this so-called pandemic, and I think they've printed, I've lost track, somewhere around $4 trillion. And this is going to result in inflation. You can't have that kind of increased amount of money without inflation. If we're sitting in a room and there's a couple dozen people in a room and everybody's got $10 in their pocket, and I'm at the front of the room and I've got an orange and everybody wants the orange, the money will bid for that orange. And the orange will sell presumably for $10. If all of those people have got $100 in their pocket or 1,000, then that money bids for the orange and the price of the orange goes way up. So inflation is simply the amount of money in circulation in relation to the goods and services. The goods and services over the last 6 months have been flat to down. The amount of money has gone exponential. So I don't know how that can't result in inflation, come 2021.
Okay. Well, I guess final question to the set of to the on topic. What would you recommend for people like my age, mid-20s, early 30s, with this quite uncertain future, especially with everything on every level, civil unrest, the banking, how do we prepare? Aside from, I know you mentioned shift to smaller banks, but what about with investing? How do we invest what we do have?
Well, yeah, I would move to smaller regional banks if you're in one of the big ones. To address your question directly, I would strongly encourage people to to get some precious metals, get some silver and gold. I'm a bigger fan of silver because if the whatever you call it hits the fan, um, you'd have a hard time with a 1 ounce gold coin buying groceries. As with I don't know, 1 ounce of gold today is around $2,000. An ounce of silver is about $30. So I think it's much better to have. Those markets tend to go up in tandem. Both the gold and the silver markets have broken to the upside. They have commenced a bull market. I think they're going to continue to increase at least over the next couple of years. So if I were 30 years old, I'd just start accumulating silver. I would encourage the purchase of silver, what are called silver eagles, which are 1 ounce silver coins that the U.S. government produces. They produce many industrial nations produce bullion coins. So in the United States, they're called eagles. They have a silver eagle, a 1 ounce silver coin, and a 1 ounce gold coin. I'm sure people have heard, the maple leaf in Canada, the Krugerrand in South Africa, the panda in China. So ours is called eagles. I would encourage people to get 1 ounce silver eagles, and just start accumulating them. Put them in a safe in your house. I am a fan of keeping those assets close to hand, because if there's a crisis. If there's a banking crisis, your ATM and your credit cards are not going to be useful, at least for a while. So, and there's a lot of good services that provide storage of precious metals in Singapore and Australia, et cetera. I don't want to have to, call Singapore and go, send me my silver. So that's what I would do. I'm like 70-80% silver, maybe 20% gold.
Okay. Yeah, that's good advice. So question I ask all my guests now, and I don't prep anybody for it. Favorite, if you had to make one reading suggestion to the audience, and it can't be a book that you wrote, it can't be the Bible.
It can't be a book. It can't be a book that I wrote, or it can't be the Bible.
Yeah, just favorite book, basically. Favorite book.
Well, I'm a big fan of the book Dianetics, which explains how the mind works. It's a good thing to understand how the mind works. It's a really good thing. So I would recommend that book. It's it's not fiction. I read a lot of fiction. I read a lot more fiction than I do nonfiction. But if somebody really wants to get a look at moving forward in life, I would recommend that book.
Oh, interesting. Who wrote it? Do you know offhand?
L. Ron Hubbard wrote it.
L. Ron Hubbard. I should know that. Okay. Oh, well, awesome. Well, where can people find your work? Where can they follow you and check out and where can they buy your books?
Okay, well, I'll take it a step at a time. First of all, I would encourage folks, not only because I like selling my newsletter, which I do, but I'm really following this conversion to digital currency and making recommendations to folks. So that's at my website, strategicfinancialintelligence.com. It's a mouthful, strategicfinancialintelligence.com. My books, you can just go to Amazon and put in John Truman Wolfe, and all my books come up. All kinds of books come up, fiction and nonfiction. So it depends on what people like to read.
All right. Well, I will certainly check out one of your books. I think I'm gonna try the one that I mentioned at the beginning of the show, the global finance thing. So
cool.
But I appreciate you coming on, Mr. Wolfe, and thank you, audience, for watching. We will see you next week.
Thanks for having me, Michael.
Thank you, Mr. Wolf.